Before we start commenting on how this budget is, it is very important to understand the context. The current government has been in power for 6 weeks. We face high inflation. The fiscal deficit has been an issue. The government wants to revive growth in a very meaningful way. Given all these things which have been served to the current government, not much was expected from this budget because the hands are tied behind the back. I think the finance minister was very, very clear when he started the budget speech that he does not want to manage his fiscal deficit by actually cutting expenses. He wanted, and he's shown an intent to manage the fiscal deficit by actually reviving the economy, by growing the economy, by increasing the revenues, and as a result, kind of manage this fiscal deficit. So first, some very good points in the budget are the very clear intent on managing the numbers of the government positively. He's already announced the fiscal deficit which he wants to see 3 years down the line. Over and above that, he has done a lot of work, even though there are only limited avenues which are available to him, to actually revive investment in terms of infrastructure, in terms of focus on the rural areas, in terms of ensuring that he's expanding education. He's talked about IIMs, he's talked about AIMS institutes, and so on and so forth. So the basic thrust of the budget is revive investment, revive manufacturing, ensure that some of the burning issues which are bothering the industry as a whole on tax terrorism, on retrospective tax, he's made his intent quite clear. So I also see very clear announcements on the fact that he will ensure the GST is implemented, he will relook at DTC, he will ensure that the tax laws are simplified, advanced tax rulings will become more a matter of fact rather than something which is an exception. A lot of thought process has gone behind that. A lot of thought process has gone behind putting money in all kinds of infrastructure projects, and that is, I think, a continuation of what we saw in the rail budget. Over and above that, obviously, he's gone after some of the specific industries where he's tried to raise some revenues. I also see a very clear positive signal to the common man. He's increased the exemption of ATC, he's increased the no tax limit to 2.5 lakhs, he's increased the PPF limit, and so on and so forth. So a very clear intent to give a signal to the common man that we understand that tax rates are high and we are trying to do something about it. He's also not changed the tax rates for the corporate sector overall. So generally, on one side, we have seen a pretty positive signal on intent and also in some form or shape reviving the infrastructure investment. As far as the insurance sector is concerned, there are a couple of announcements which are very specific to the sector. One was what was expected for the longest period of time, that he has announced that the government will finally pass an insurance bill and take the composite FDI limit from 26 to 49%. That is obviously a welcome move, something which the governments have been talking about for the last 10 years. It has not happened. This particular government has a majority after almost 30 years, a full majority in parliament, a composite majority between the two houses. So if it wants to pass a bill of this nature, it is a positive. So I think that will allow a couple of $1 billion to come into the sector. It will hopefully that money will flow to the investment in the sector and allow the insurance companies to reach deeper and wider parts of India. Second, they've also increased, as I mentioned earlier, the exemption limit on ATC. So you will see, hopefully, the tax, this saving in tax which is going to the customer will lead to more investments in the insurance sector. He's also announced his intention to actually see as to how the insurance could penetrate more in the Indian industry. So I think he's talking about some consultation with the sector itself as to how the insurance penetration could be improved. A very interesting announcement has also happened where the banking sector has been allowed to raise infrastructure money. There will be no CRR, SLR. One of the key demands of the economy which the insurance sector meets is in actually investing for the long term. So obviously there is a clear recognition when he's announced this for the banking sector that we need to raise funds which can be used for creating long-term assets. And obviously the specific announcement has been made for the banking sector. We expect the finance minister and the government to be focused on ensuring that the growth in the insurance industry could also come back, because we are another very important sector which can invest money for the long term in long-term assets. Overall, a very, very positive budget, shows maturity, shows the clear intent of the government to revive the economy, shows the intent of the government not to announce populist measures, shows the intent of the government to protect the common man, And I do believe that given that the short time of 6 weeks they have had, they have come up with something which was better than expectations. And hopefully if they can get to implementation, if they can turn this intent to real action, the Indian economy will start seeing positive days ahead, and that will ultimately reflect from an investor perspective and equity markets also rising as we move forward.